Okay, hey everyone, it's Michael Valtos here from Orderflows.com, and this is the Orderflows market analysis for Tuesday, February 21st, 2017. And today did not disappoint, the day after President's Day, and we rallied some more. Even got a late rally again in the afternoon. First, before we get started, brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So the tools used in this presentation is Orderflow Traders, the Orderflows trader with, my own analysis thrown in. You could have a footprint chart, but if you don't know what you're looking at, what's the point of having a footprint chart to trade with? That's one of the big mistakes a lot of people make, is that they think, getting a footprint chart is the way to go. But that's only part of it. You have to, it's a tool. Footprint charts are tools, and you have to know what you're looking at, and you have to know what to look for. I've also got a few other indicators in here: the Valtos flip, the U-turn, and the transition. Yes, they're named after me. They're my proprietary indicators. And, they all deal with reading order flow in different ways. Okay, so, without further ado, let's get started. All right, so first up, this is the E-mini 3-range chart. And, we ended up higher for the day, obviously. Expectations for more fiscal stimulus and, some changes in regulations continue to, feed these gains that you're seeing in the stock market. The Dow was up, I think, 0.5%. And oil ended up a little bit higher. I think it was at $54. Gold's kind of steady, but when you come into this morning today, it had been pretty quiet since the European Open. Even though we're trading near our highs, coming into the session, basically, the overnight low is like 49, and coming into 8:30 when the cash opens 8:30, you're looking at 54.25, was your high before that. We hit a new high just before the cash opened at 55. So you're talking basically a 5 or 6 point range, from the European Open till now. And, it was pretty quiet. But, if you were watching, you saw when we hit that high there at 828, thereabouts, we got that divergence. So you got the new high with a negative delta. And, you're starting to come off, but you're coming off right ahead of the cash open. I did think that, maybe we could catch a bid once the cash opens. And, we started coming around. Why I thought that is, President's Day is, it's one of those patriotic holidays. As long as there's nothing negative coming out in the world, people tend to come in, after these long weekends. And, if there's nothing negative, I think they'll be buying. So, we did rally. We made a new high. So at 828, you got a new high. You got a divergence. Came in here, started making new highs just about 5 minutes after the cash. Got another divergence, 835, boom, right here. And you got a ratio, which again is kind of, which normally you would think is going to be bearish, right? And you got a divergence, you've got a ratio, point of control up near the high. These two bars, as we started making these highs, in intra-bar, were flashing divergences, because they did have min deltas, 500 here, 300. So, at one point in the bar, the delta was negative and, we're busting into new highs. So we're flashing some divergences there. So, coupled with this new high at 828 with the divergence, then I start seeing some divergence in and out, in and out, in and out, in and out in the next bar. And then this bar prints a divergence. And it's at that point thinking, okay, within, 7 minutes, we already got two divergences. I want to wait and see, rather than just coming in and looking for a place to sell. Again, I don't usually come into the market with a bias, but, for this morning, like I said, there was nothing really negative out there that's going to affect the market today from the weekend. So, what's going to happen is the market's going to go up, in my opinion. And then you started rallying here. We got ratio, and this is 3 in a row right here, 1, 2, 3. That's what I like to see. What I was expecting to see in this bar is a pullback. You didn't. You got another bullish ratio. Now this is interesting. Here you have negative delta, right? Minus 763. Okay, there's a couple ways to read that. I won't get into them, but obviously at one point you had another divergence forming because, it's minus 900. And it was, towards late in the bar that it's spun around and settled higher. Okay, then you got 3 here. I was looking for a pullback in between these 2 points of controls, right? When I say you have this 3 in a row, this is bar 1, this is bar 2, this is bar 3. Look for a pullback, usually in this 4th bar here. Look for a pullback in between these 2 points of controls. So that's, is that 36 and a quarter to 56 and a quarter to 56 and 3/4. Okay. Ideally, that's where your ideal entry would be. Okay, now again, take things in context of where they are in the market. Do you want to be buying near a high? Well, if you think the market's going to go higher, yeah, of course. Or do you want to be buying near a low? Preferably, I normally love to buy near lows because I think, I don't say I like picking lows, but I'm always looking for those reversals. When you're going to new highs, especially new contract highs, lifetime highs, you never know what's waiting for you up top. So, take that with a grain of salt. But I've already got this minor bias coming in here, and I've already got a couple divergences printed. Got one that, almost happened again here. If this happened, it would have changed. We would not have had this 3 in a row. But so what I normally look for is, this bar, this 4th bar, to be a red bar. In this case, it's green. All right, so, what happens here? This is where you get this is where you get your red bar. But again, what do you got, right? You got another divergence. This time you got a ratio bounds low, indicating some volume up here to sort of stop this move. You can see nothing traded here. We hit this level, boom, we sell off. You got imbalance here, imbalance here. Okay. Where did we trade down to? In this bar, right? We traded down to 56 and a quarter, this point of control, right? I said look for a pullback. After this 3 in a row, what you're doing is you're looking for a pullback in between these bars here. Not these bars, these point of controls, 1, 2, or in bar 3 point of control and bar 2 point of control. And in this case, you pulled right down to it. You pulled right down to 56 and a quarter. Okay. Next bar, again, it's bearish. Got a bearish ratio right here. Strong negative delta. Okay. But again, this next bar, it's alternating. Now here you got bullish ratio, bearish ratio, bullish ratio, bearish ratio, bullish ratio, bearish ratio. After you get 1, 2, 3, again, I'm at that point I'm looking for the market to start going sideways, which it does. When you're getting alternating, bullish to bearish ratios, bar after consecutive bars, 1, 2, 3 already, I'm starting to look for 4th, 5th, 6th, and I'm looking for it, basically to go sideways, which it does here. But again, going back to this 1, 2, 3. Right, your entry for this setup is between these 2 bars. Okay, ideally I'd like this bar to just be gone, that'll make this analysis a lot easier. You get this bar here, it's red down here, you get the pullback right there. In this case, it just takes a long way here, and then we start popping back up again. Now, it's the other thing to notice, right here you have another divergence. So going back to here, 828, you've got one divergence, right? 828, 835, another one. 841. So it's already, 828 to 841 is at 13 minutes. You've already got 3 divergences. What happens, right? So we start going up. Got another divergence right here, 847. So within 20 minutes, 19 minutes, you've already had 4 divergences. And, on trending markets, you're going to get multiple divergences. Oftentimes there's going to be a group of them early, right? And, that's what you want to be alert for. So you could have, put 2 and 2 together, one with these divergences already happening here. This is already your 3rd one. But again, you could see you had one that was forming in here. You had one earlier forming in here. If when you're watching the market, you could see it. And then you got the 3 in a row. You got the pullback right in there, and it's, to me, that's just very clear. It's just off to the races. So, if you're looking, be buying anywhere, say you don't want to take this 3 in a row. The divergences themselves gave it away. And there's a great buying opportunity around the 57, 58 area. And then we just proceed to keep going higher, right? More divergence that fails, it comes right back. What you don't want is, a divergence, in a ratio. Then the next bar is this, a bullish ratio right after that. And then you just go higher. And then, again, another one here, you just start stepping up higher, higher, higher. You get all the way up to 64. And this is 924. You get a little bit of a pullback in there. You come in here, make this new high here at 943. You got a stacked buying imbalance. You come up here to 64 3/4. Got a divergence, got a ratio, ratio after that. Then another, another ratio here. But look at this highs, right? You got all these negative deltas, 1500, 2000, 600. These are small, 600, 200, 2200. At this point, you're thinking, okay, maybe this can be the high, right? Why? Because you got right up on the high, very strong negative deltas, 1500, 2000 here, 2200. Now, why would I say that there and I didn't say it back here? Well, this is kind of strong here, 2100, 1000, 8 is nothing, minus 1000. At this point, also, I would be looking and say, hey, maybe this high is going to be the high and it can hold and we can sell off. And then, we start coming back in here. It's just spinning its wheels. It gets kind of small here, 200, 300. These are kind of cancel each other out. But obviously, when you get back in here and you take out that high, honestly, it's not far out of the realm to be looking, if you're looking to get short off of this in here at this structure here at 924 to 930. There's nothing wrong with that, getting short in here somewhere around 60, 62, 61 and a half, with a stop up here at 3.5. Because if you're going to take out this high, the whole reason for being short is, is shorten this high. So you're going to have your stop right around this high, either at the high or a tick above it or a tick below it. Obviously we came back, started creeping back up here. This delta, 2,400 is quite strong. Then you just pop right up here with this stacked imbalance. So obviously we're going to take out the high. But again, do you want to risk 2 points? And where's your target going to be? It's going to be down in, if you're talking about getting short around 1.5, 2, that area, you should be looking around, the 57s, so you could easily get, twice as much out of it than what you're risking. But even going back, some of these other ones, can you be looking to short up? Not really. There's not enough. Again, I wouldn't want to be getting short on this one, when I'm staring at these very strong deltas on the way up, 2,000, 2,000, 4,000, 1,900. And yeah, it's negative 1,300, which is quite strong, but it's on the back of the strong buying, and when I see that, that's not what I like to be getting short at. I would rather be getting short somewhere where it's like here, this one that didn't work. At least here, the deltas are getting a bit smaller. -5 is nothing. 500, yeah, it's almost, I don't want to say nothing, but it's not that strong. I mean, 500 is obviously not as strong as 1,900 and 4,000. So this one didn't work out, but so what you got up here is quite similar. Around the 64 3/4 with all this, this negativity, so to speak. You got your divergence. You've got, 1, 2, 3 ratios here. This one is not. But then, again, you're sitting here, you're staring at this point in time, you got to make a decision. What should I do? Should I get long? Or should I not get long? Should I get short? Or, sit out? Or are we going to go higher? Honestly, at this point in time, I'm looking at this thinking, this, we can sell off from here. It's not a bad area to be getting short in, and so if you could be getting short somewhere, this bar is up, but, anywhere between, when you're looking at it at this time at 957, trying to pick an area to get short in, I don't know, 63, 62 and a half, 60, anywhere between 2.5 to 3.5 would be fairly decent. This next bar comes in, we trade up to, I think it was 3.25, and then you get this bar here, point of control right on the high. You got a ratio bounds low, indicating some heavy volume up here. So we'll think of what's going on here in the psychology of the market. We hit the high, start coming off, okay, working your way back up. All these price action traders, right? Everyone says, oh, you got to buy the pullbacks, right? Because we're going to go higher. Well, that's what they're trying to do here, right? They're trying to buy this pullback, but now you got some resistance coming into the market. You see 1,400 traded here on the offer. Even went bid here at 3.25, so it was 3.25, 3.5. Didn't trade 3.5 because the guys at 3.5 or the sellers at 3.25 just came in and whacked it back down. They hit the bid, turned it offer, and trades 3, trades 2.75, trades 2.5, and we just settled. Start working your way down. From there. So the first time, back here at 924, you know, yeah, I think it's a perfectly legitimate place to get short. It didn't work out. Okay, you got stopped out. You took a loss. Okay, fine. You know, you look for the next trade. You know, and I know like people want to have every single trade that they ever take to be winners, but you know that's not what trading is. It's not about being right 100% of the time. It's about being right, you know, more than you're wrong, and preferably having your winners be bigger than your losers. I mean, you know, people, you know, the problem with a lot of traders is, you know, they want to be right all the time, and because of that, you know, they suffer bigger losses because they think that they always got to be right, that they can't accept the loss, so they let their loss get bigger, and it just exacerbates the whole problem. So, you know, it's one of those things, you know, when I was on the floor and I was learning the hand signals, you know, this was just in a hand signal class. I remember the guy, Romy Bracy, was the teacher. I mean, you had to take that class, you know, to advance your career down there. Otherwise, you'd be a clerk the rest of your life. But yeah, he said, don't beat yourself up. You know, you have a loss on a trade, or you make a mistake on an order entry or something, and you know, just put it behind you and carry on. You know, get on. You know, so you make a mistake, okay, you cover it. You know, get on. Don't beat yourself up over these things. And you know, that's what you got to do if you want to be successful. Is, okay, you take your loss. Okay, that's fine. You know, losses are going to come, and get on to the next trade. So you know, if you're getting in here around 2.5, 3, you know, you're kind of spun around a little bit. You know, trading 1.5, you know, 2.5. You know, then it starts coming off here. You know, we trade all the way down to you know, 7. What is that? 7.75. You know, even down here, 7.5. You know, then the selling starts coming in here. You can see the selling really starting to pick up here. You know, the delta's getting stronger. 557, 1600, 2500. You know, then we get down to this 56. So, you know, that's, if you're getting short at 2.5, you know, 30 minutes later, we're trading 6.5. That's 6 points, right? On the other trade, right, you lost 2 points. You know, so people always say, oh, you know, I got to have these trades. It's got to be 4-to-1 risk reward ratio. I just laugh, you know, because when I see that, you know, it's usually by people that don't necessarily trade and don't understand that sometimes, you know, hey, even if I could get a tick out of a trade, I'm happy, you know, because, you know, for whatever reason, you know, sometimes trades just don't work out. You know, you can't predict what's going to be happening in the market. So, you know, that was really, you know, I had a dental appointment later, so I missed what happened with the rest of these, you know, with the rest of the day. I did expect, I'll say expected, but, you know, last week, pretty much, you know, the last hour and a half, you'd get these late session rallies, and again, I was sort of in the back of my head, you know, looking for something like that to happen again today, and you know, today did not disappoint. You know, I'm going to show you this Dow chart. You know, I love this mini Dow, this 100 range chart. You know, this is that indicator, the Valtos Transition, you know, which I talk about here. You know, these 3 indicators, the flip, U-turn, and transition. And, you know, on the 100 tick chart, it's sitting on there. You know, the settings is just 3, 100, 400. You know, mini Dow, you know, before cash open, you know, don't really bother with it, honestly. So here's cash open here, 841 gives a nice buy signal. So this is around the you know, 675-ish area. I mean, realistically, you should be getting long. You know, let the market take you in. 680 trades all the way up to here. You get a sell here, but again, it doesn't sell off. You know, this is one of the things, problems that indicator traders have, is they think as soon as they get an indicator fires off, they got to get short. But you know, let the market take you in, right? If you're getting a sell signal, let the market start to sell off. Just as here, right? You get a buy signal, let the market start rallying, get you in. You know, so this one didn't work out, obviously, but again, you know, did the market take you in? No, it didn't, right? So should you be taking it? Probably not. Then, you know, I get up here, you get another one. It starts to come off a little bit. You know, I don't know if it would have gotten in. You know, I'd like to see it a little bit more rather than 1 or 2 ticks. You know, this one here, you know, it's it didn't. Even though it did sell off, I don't think this was a decent one to take. It's selling, get short here off this bar, then the market just rallies again. I'm not waiting. This is how many minutes before it starts selling off. Even though it was nice, this is what you want right here, right? You get the signal saying, hey, get short. The market sells off, right? From 05 down to 00. Okay, now you can get short. It's making its move. What you want, when a signal kicks off, right? You want it to be, you want the action to be fast. You don't want to be sitting around like here and just, let the market lope around and then make its move. You want the move to happen very fast, and this is it. So say you're getting in, unless you're quick, right? You could get programs out there, signal plus whatever, or signal minus whatever, and it's a nice move down, Again, another one here. This one, not really. This one I don't think you should have been taking. You don't want to be getting long, and the bar comes right down on you like that. Here, 1050. I don't know. Even though it's nice to say, yeah, you should have taken it. Again, it starts up and then it comes right back down. That's not what you want. What you want is the move to be happening, in the next bar dramatically, not like this, kind of half-hearted up a little bit. This one you definitely don't want to be taken, right? If you're getting a short signal here, right, you should be waiting, looking in the next bar, let it come off, right? If it starts rallying, going up, don't think, hey, I'm getting a better entry. No, you're not. You're getting a worse entry because it's probably going to be going against you. This one, you probably would have taken and, maybe taken a small loss. Same thing here. This one, it started to, maybe you could have managed that for a little bit of a scratch. This one you shouldn't have been taking. This one, again, this is getting back to, the market's been putting in these rallies late in the day. We're coming up on 3 o'clock, over here. Now, we had just rallied from basically, okay, what I'm getting at is this. Okay, so 1049, you got this low here, right? You make this move all the way up here. Do you want to be taken along when you just rallied from 660 all the way up to 720? Do you want to be getting along again? Well, no, I don't. I like to think things in context, right? Not when you're up here near the highs, but busting through new highs. Do you want to be getting along? I don't find that very, very high percentage trade. And then late in the day, again, right after the cash close, again, I don't advocate for, you can trade after the cash close. The volume is thinner, but people are still trading it. It's quite active. This was a quick one. Basically, 05 down to 690, so it's quick 15 ticks. But, so that was the transition there on that mini Dow chart. Just real quick, let's take a look at a couple other. This is the euro currency. There wasn't much in the euro currency today. It's pretty quiet. Again, this is 3 in the morning. This is 9. It's not really going anywhere. I don't know, so you probably would have scratched. Late. I'm not a big fan of trading euro currency after 2 o'clock anyway. 2 o'clock Chicago time is 3 o'clock New York time, and pretty much everyone's. I'll say everyone, but most people, cash dealers, are looking to go out and get blasted already, get drunk. So this was the bonds. Okay, transition. This is a 987 tick chart, and it gives you one signal today, and look at that, right off the low. And look at that. That's a 1,000-point move right there. I'm not saying that you would have bought it here and sold it up here. Honestly, if I was in this trade, and I'm looking in here at 848, for me, the bonds, I'm really only looking for 5 or 6 ticks realistically. I'm happy with that. I don't hit home runs in the bonds. I have my profit targets. So this one, it would have been met. But that's a nice move. Again, I'm not one of these people saying, oh yeah, look, you could have got 26 ticks out of this move. Be realistic. Even though if the signal gave it right here, it might be a little bit more apt. But even if I was long and I sort of run into this, I'd be looking to get out at this. Hey, that's a nice profit. I would have just been happy to take it and be done with it. But I just. That's me. You know, what else do I got here? Get some other charts real quick. Crude, I think I got 987 tick on the crude, or did I show the E-minis? 987 tick on the E-minis. There's a couple signals in the 987 tick. You know, why 987 tick? Well, you know, a crude guy turned me on to 987 tick charts. 987 is a fib number. And, you know, it's just one of those things. He says, hey, you should look at a 987 tick chart. And ever since then, I've kept it up for the last couple of years. So here you got to sell. This is the transition again, 3, 100, 400. This one, you know, if you took it, again, I like to let it sort of lead me into the trade. This one didn't work out. You know, say you got short, you know, you would have been stopped out. But again, you know, let's open it up a bit. You know, this is like 7 1/4, or 7 1/2. You know, it trades down 1 tick. Now that's it. You know, at least let it come down to 57. You know, at least a half a tick. You know, ideally, like I said, you know, let the market lead you in. You know, it's not doing anything. You know, it ticks 1 tick lower and that's it. Then turns around and starts rallying. You know, so is that the best trade? No. You know, say if you took it, you know, where's your stop? You know, your stop's just going to be up here, you know, 58 1/4 or something. Okay, so, you know, you did get one other signal. And then look here. So you're getting a buy. Okay, the next bar, it's nice. You know, it's a nice, you know, that's 8 1/4 right here. It trades all the way up to, you know, almost 9. You know, it comes back down to 8, I think, in this one bar here. So, you know, if you're getting, you know, it's making a move. So, you know, you could say you're getting in at, you know, the high of this bar ends up at 8 1/2. So, you know, you give it a half a tick, get in at 9. Okay. Say you don't, you want it to trade through there. You know, you can put a stop in, whatever. You know, you're risking 1 tick here. I mean, you could, you know, obviously you could have more rather than not 1 tick, 1 point. But, you know, it's starting to move in the direction that you want it to go, right? It's gone up from 8 1/4 up to 9. So it's already, you know, 3 ticks it's moved. And then it trades all the way back up to the highs, you know, up here at 4 3/4. So, you know, you could have got something at least out of that trade there. That's the E-minis. Okay, well, I'll show the crude. I didn't look at the crude this morning, but would you have anything? I'll go back here. So this is the transition. This buy again, yeah, it doesn't go any higher than the bar. This bar here, I mean, it goes here. So this high is what, 79. It trades 80. You know, do you want to get high? Get into a trade 1 tick? No. You know, just as here, right? It gets 1 tick. You know, 71 trades down to 70, and then it sort of goes sideways on you. At least this one here, you know, 60 comes all the way down, you know, 3 ticks to 37, even the next bar down to 56. You know, again, it's up to you if you know, if you want to use, I think you should use more than 1 tick, not just, you know, getting long, getting short off the low of this bar. Take the low plus a few ticks. So, you know, even if you're getting long here at this low, getting short rather at 6, you know, it comes all the way back up to 66. That's 10 ticks, right, against you before it makes that move from 56 down to, you know, down to the 30s. What else? I think I got some Dow charts here. I don't know. What is this? This is the flip. Was there anything on the flip? No. Well, that's the Dow. That's the flip 5 and 25 settings. Let's just quickly see if there's anything else. Okay, the U-turn. So this is one of the other indicators, right? The U-turn here, Valtos U-turn. Again, yeah, I'm showing them on normal bar charts, just for ease of use. It's easier to see it. Where's my chart? Okay, so U-turn here. So 3 and 500s the settings. So, okay, again, I'm not going to talk about this, overnight in there. It's basically from, 8 o'clock. So here you get a couple signals. These don't work out. It pops up a little bit, comes right back down. So you're getting stopped out. If you're even getting into this first one. The second one you probably would have gotten into. So at least you're getting stopped out there. So then look at here, right? The market takes you in, comes back, but then it comes right back. So again, I'm not saying you would have been buying it, here, down here at the low. No, you should be buying it somewhere in here. This area of, what is that, 7 and a quarter, somewhere in there. And, your stop would be below this bar. So below 56. So, you're risking a point and a half. And you see it shoots all the way up to 60 right away, comes back down, get another buy signal here. So again, if you got out up here, get another buy signal in here. It's giving you the signs that, it could go higher. The next bar is up, even though it turns down. It doesn't get below this bar. You got this double bottom here, which is good. The last thing you want is for it to make this new swing low here, then take off, because you'd be stopped out, or be looking at getting stopped out. Then again, from 58, you'd be realistically 58 and a half. That area, 58 and 3/4, you should be getting along, and then it's just right back up to the highs. And then you drop off quite sharply. So, thanks for watching this video. It's already gone 30 minutes, but if you want to learn more about the trading software used in this presentation and the indicators, and how you can profit from order flow trading, visit my website, orderflows.com. I say you already have a order flow footprint chart. That's fine. I have a trading course. You can pick up some extra tips in. If you want to get my software, you could get it there on the site. I just reopened my trading room today. I took a break from it. I was looking to close it, but then a lot of people emailed me asking me to keep it open, and those are people that have been with me for, some of them for a couple of years already. I don't charge for that. It's free for users. So as long as you are a user, as long as you buy the software, it's a one-time fee. You get access to the trading room. I don't cut you off. At least, it doesn't run every day. It runs Tuesday, Wednesday, Thursdays, but from 8 a.m. to 10 a.m. But it's a place where you could see me. Reading the order flow. So you could have seen me earlier in the day calling the E-minis, explaining it as it's happening. So anyway, visit our website, orderflows.com. Make sure you subscribe to my YouTube channel. So, anytime I post a new video, you'll be alerted to it, and you'll know that there's one that's been posted. So thanks, and hope to see you on the inside. Bye-bye.